This has been such an interesting several days on the trading market, and I think for folks like me, who don't short and actually buy fundamentally sound companies, this has been a lesson in what can happen as a changing investor environment descends upon us. So I think that there has been some harsh critics of what's happening on both sides. I think that the reality is that hedge funds have been shorting stocks extensively for years, and being able to look at short interest is something that as an institutional investor you do all the time. If you're long a stock, you want to know who's shorting the stock, you want to know how much short interest there is in the marketplace. I think that over the last several years the US market has created a construct to allow for greater investor participation, and it started with enhanced 401k investing, and then we moved to ETFs, fractional shares, online robo investing, and now these chat boards, which, if you go back to 2000, this is the same type of activity we saw in chat boards back then. They just were less widely known. And so I think that what will happen is the SEC will look into this on a company by company basis. And I think that similar to some of the halts that were put in when we saw significant volatility during the great financial crisis, you could see some additional curbs put on the exchanges. You are seeing some of the brokerage houses, the online brokerages such as TD Ameritrade, for instance, putting in curbs on their side as well. But I do think that the cat's out of the bag, the proverbial cat's out of the bag here. And I think individual investors are going to continue to invest, more actively in the next several years.
Yeah, and just on that very point, on what the SEC can do in this situation, can they do too much? Because this is, again, free market play, right?
It's rather difficult, right? I mean, they're looking at it in terms of a kind of pump and dump mentality, but with the number of millions of users on some of these chat boards, it's difficult to find one person to take fault with. And so I think they will have a difficult time proving or putting any sort of limitations on individual traders. But I think this is yet another example of how the investing environment continues to evolve with the evolution of technology in our industry. And I think that, the same way that we're looking at regulation in other parts of technology, this could be something that deserves more scrutiny over the next couple of years. But I certainly do not side with those who would say that individual investors shouldn't be doing this. This is democratization at its finest.